I think that if people are listening to other individuals talk that say we're getting a new Fed chair, rates are going to start to go down because of that, they're wrong. Hi, my name's Danny Brown. I'm the CEO of Myriad Real Estate Group, and this is going to be our May market update. So what's affecting the real estate market today is going to continue to be mortgage rates. So we were on a 3-week slide, and mortgage rates were the lowest that they have been since the conflict in Iran started. So things were trending in a super positive direction, but things have escalated as of actually today, which is the end of April, and mortgage rates have popped back up. So the good news is that the spread between the 10-year and where mortgage rates at continues to be low. So the volatility is minor. We've gone from the low 6% range, high 5s for some of the loan programs that you're in, into kind of the mid 6 range. So it's not super volatile. If this was 23 or 24, we'd probably be facing 7 to 8% mortgages. So the fact that those spreads have improved so much, we're just looking at rates in kind of the mid 6s right now. Other big news is that the investigation into Jerome Powell has been dropped. And so Kevin Warsh is going to be voted in as the new Fed chair. That's taking place this month. So we just had the last announcement from Jerome Powell in April where they held rates the same. He did come out and say that he is going to remain a Fed governor. He will be a voting member of the board. And remember that the new Fed chair is not a dictator. He doesn't just unilaterally make rules. So if you're out there listening to anyone who says, just wait until the new Fed chair comes in, we're going to see mortgage rates drop, I don't think that that is an accurate statement. I think mortgage rates will stay the same. I think Warsh is going to have a really, really hard time in this environment convincing the other Fed governors to vote to reduce rates. Even though that's what the administration wants, that's what he's going to want, there are too many people involved in the Fed that are voting members that do not agree with that it's going to be a while before we start to see those cuts implemented. So be prepared that they are probably going to hold firm, and therefore we're not going to see those drop in mortgage rates that some people are thinking we will as soon as the Fed chair changes. So is there a scenario in which we could see north of 7% mortgage rates? Yes, I think it's pretty unlikely. For that to happen, we would need to see a continued increase in inflation. We would need to see the Fed probably start increasing rates rather than just leaving them as is. And we would probably need to see boots on the ground in Iran where that conflict starts to really escalate. If everything stays as it is, which I think it will, I do not think Iran wants boots on the ground. I certainly don't think the U.S. or this administration wants boots on the ground. That will really escalate things and just cause a total mess over there. So I think that we're going to see more of the same, but both sides are really looking for an out where they both save face. So if the blockade continues, inflation's going to be mostly transitory, where we see the run-up in inflation and then it just kind of stays. It's not going to be a continuous increase month over month. Once it increases, it's just going to be increased. And that really has to do with the fact not only are energy prices higher and the cost of all of us getting gas at the pump are higher, but oil is just in everything. And it's going to cause everything across the board to be more expensive. Our clothes, everything having to do with AI. All of these companies utilize oil and different parts of petroleum to create chips and everything that goes along with it. So the price per barrel of oil is going to affect inflation because, again, as I said, oil is in everything. And so as that cost goes up, the cost of everything will go up. Conversely, the other thing that would impact mortgage rates is job numbers. So if jobs are being increased and inflation is staying high, then the Fed, there is a possibility that they could increase rates. I think that they will hold firm and not raise or cut and just stay where they're at during this whole Iran conflict. But if there is a chance that the jobs market deteriorates and we start seeing mass layoffs, then the Fed's in a real real weird position where we have higher inflation, but we have a job market that is going down. So what are they going to do then? You will probably see, and we are already seeing, some infighting amongst all the different Fed governors. And we've seen more people dissenting, whether in favor of cuts or increases, than we have actually seen in many, many different Fed chairs. So the civil war that is going on amongst the different Fed chairs is quite interesting to watch and see how it all plays out. So the thing to pay attention to when it comes to the mortgage rates is, does the conflict that's happening in Iran continue to escalate? And what happens with job numbers? So that's really what we've been paying attention to for the last couple of months. If it wasn't for the war in Iran, I think that mortgage rates would be substantially lower. We were headed in a really, really positive direction just in general, and then March happened and it derailed everything, which is the definition of a black swan event. Nobody saw this coming. Really, the housing market comes down to two basic things, as I've mentioned before: supply and demand. People tend to overcomplicate it, but it is really that simple. So right now, the supply of housing in the greater Phoenix area is actually really flat. We are hovering just below 20,000 active listings on the market, and we have been there for several months. So the number of homes going under contract and selling versus the new homes coming on the market are really canceling each other out. This is creating a very kind of boring housing market, to be honest with you. Affordability definitely continues to be an issue, but like I mentioned, mortgage rates are hovering in the low sixes and there's not a ton of volatility there. So the buyers that are in the market are feeling fairly comfortable. Sellers right now are becoming more inclined to price things accurately. And when they're not priced accurately, they're doing price reductions. So we are seeing the number of price reductions take place on listings increase across the board. And that is showing that sellers that are active in the market are coming to terms with reality. So because buyers are feeling mainly comfortable with mortgage rates where they're at, and sellers are becoming more on board with the market that we live in and that they're not getting these record high prices, that's really what is maintaining that basic level of sub 20,000 active listings on the market. So what can buyers expect? Well, we're headed into the end of our spring selling season. This spring selling season started off really strong, but then got muted, as I mentioned, because of the war in Iran. But as of right now, buyers can still expect to be able to negotiate, so they can get the prices down on homes. They are getting sellers to cover their closing costs. We're seeing rate buy downs take place. We're getting repairs made on homes. So I've said this countless times that it is much better to be a buyer in this market than a buyer in the market that we found ourselves in during COVID, when we had record low mortgage rates. So right now you have choices. You have the ability to get good deals on these homes. And I was showing a buyer the other day, and we were able to look at a history of a listing, and we could see like clockwork that this seller was reducing their price every 30 days. They were doing it every Wednesday or Thursday, and we were 2 weeks ahead of the next price drop that I predict that they're going to do. And so for them, I advise them that the time to make an offer on that property would be a week before they do that next price drop. Because what tends to happen, and I've seen it happen multiple times even on my own listings, where a seller will list, they'll do a price drop, they may not get much interest, they'll do another one, and then all of a sudden people start becoming interested in that property, and then you get multiple offers. I had it happen on one of our listings just recently where we started at a certain price, we did 2 price drops, we got below $550, and boom, we had 3 offers all at the same time. Home ended up selling above our list price. And so if those buyers had have made the offer just before we did that price drop, they probably wouldn't have been competing with other multiple buyers, and they probably could have gotten the house at a better price. So I always say, if you're a buyer and you're interested in a home, odds are other people are interested in it too. So the best time to make a move on that is before the seller adjusts their price, so that you can avoid competing with other buyers. So what can sellers expect? Well, it's going to depend on how long interest rates are, in the mid sixes. So that tipping point tends to be in the mid to low sixes. Anytime we get above kind of 6.5%, we do see a pullback in that buyer demand. And so sellers can expect longer days on market, a lot fewer showings. They might need to be priced more aggressively. They need to be willing to, if they get an offer, negotiate. Be thankful that you got an offer and recognize that buyers are also fishing. So they're wanting to see, what can they get out of you. So if somebody takes the time to put pen to paper and send you an offer, respond. Try not to be insulted and recognize that this is a business transaction. They don't know you. They're not trying to insult you. They're trying to get a good deal on a house for them and their family. So the thing that you need to do is really look at your numbers and come back with a reasonable counteroffer to keep that conversation going. And as we get into the summer months, the temperatures in Phoenix are now hovering in the mid to high 90s, and we know that 100-degree temperatures are right around the corner. So we always see a pullback in buyer demand during our summer months. So if everything kind of stays constant with rates in the mid sixes, starts to get warmer outside, kids are out of school, people start leaving Phoenix and going on vacation, we can also start to see homes taking longer to sell and selling at slightly lower prices, because that's just the seasonality of Phoenix. If you have any questions on the current market conditions, if you're thinking of buying or selling, definitely leave a comment below. Don't forget to like and subscribe, and I will see you next month.